regarding FHAs, and you've probably gotten a lot of inquiries regarding this different program. We have the 203K offers two different types, Streamline and Standard. One thing I want to make sure that everyone's clear of is the Streamline doesn't have to do with Streamline of documents. It has to do with the Streamline of the process. So you're still going to have to get together your regular documents, income, credit, asset documentation. And then we have the other program, which is the Standard. And that I've heard many different terms. I've heard it called as a full, a regular, a consultant loan, but it's pretty much your standard 203K. One thing important to remember is that the 203Ks, you can have a purchase or you can have a rate and term. You're never allowed to do a cash out 203K, and in fact, there's no cash back to the borrower with this type of program, even with the rate and term refinance or purchase, no cash back to the borrower. You're going to be following your regular 4155.1 underwriting handbook. It's your regular credit guidelines. There's no additional part of credit as far as the 203Ks. So for example, if you have a 3 or 4 unit property, you're still going to have 3 months reserves. You're still going to have self-sufficiency. You're going to have to meet that. One thing to remember, even as I go through this entire presentation, remember that your lender may have credit overlays. So even though we're going through this program and we're going to be going through the general HUD guidelines, as far as credit go and as far as the 203K programs go, remember to please always check with your lender to see whether or not there's additional things that you must meet. Your 203K loans allow for repairs to be financed into one loan. So really what that means is you're going to take, if it's a purchase, for example, you're going to take the purchase price, add in the repair costs, plus some additional costs, which we're going to go into later on in the presentation, and we're going to have one loan. The sale proceeds are dispersed at closing. So meaning when you have a purchase or if you have a rate and term, if you're paying off a previous lender on a rate and term, or if you're paying a seller, they basically at the end of the day, and when that loan closes, they actually they get paid then, and post-closing becomes very important regarding the 203K loan. The lender is going to hold all of the repair escrows. So your borrowers and contractors are still going to be working with the lender after the loan closes to fund the repair portions. Once the work is completed, your lender may require inspections on the different products. For Standard, you're always going to have inspections to prove that the repairs are completed. And for Streamline, it's really the lender discretion whether or not inspections are going to be required. So let's talk about what type of properties are actually eligible. You are able to do a 1 to 4 unit property that's completed for at least 1 year. So those multis, the 2, 3, and 4s, they are eligible for 203K program. The property has to be completed for 1 year. I have had questions regarding new construction come up to me and ask if we can help a builder finish off a home or and so forth. That is not allowed. Your properties have to be completed for 1 year. But what can be done is, and probably throughout the country you may have seen homes that basically are torn down to the foundation, or they keep a part of the doorway. If anyone on this call is from New Jersey, you see that a lot down the shore, where you see an entire home being torn down, but they leave the foundation and build a new home in its place. That's actually eligible for the standard 203K. You're also able to convert single families to multis, and then vice versa. So if you have a two family and you want to convert it to a single, you're okay to do that. If you have a single and you want to make it a 3 family, that's going to be okay too with your standard product. Just like any other FHA loan, one thing you always have to remember is that your health and safety issues must be addressed. You cannot close and fund a loan if the property is unsafe and there's health issues that have not been addressed. Andrew, at this time, I thought we were going to have another poll for everybody.
Oh, hello?
Yes, hi. Did you want to do that poll?
Yep, no problem. I can put that out there. And just so you know, we're getting a lot of questions in, so everyone, keep submitting your questions. You'll see a question panel on the right-hand side, and you could submit your questions right over there. As the presentation's going along, if there's something that you want to ask, feel free to just ask the questions as we're moving along. And
right, and like Joe and Andrew have said before, if we can't get to one of your questions, then what we're going to do is we'll do a follow-up email to everyone with this presentation along with a question and answer for anything we haven't gotten to make sure that everyone's questions are answered. And Andrew, if you could just let me know when to continue when the poll is completed.
Sure. So right now we have about 33% of the people have voted. Basically, we want to know what's held you back from originating more 203K loans in the past. You know, there are a lot of people on the call that have been that have not even touched 203K loans. Some people have initially been involved in some 203K loans, and we also have some experts on the call. But we want to know what's kept you back from doing more 203K loans. Right now, we have about 67% of the people that have voted, and looks like the big reason is limited product knowledge. Limited product knowledge seems to be like the top thing. Following right behind that is limited lenders. We have 37% of the people say that they have a problem with, just not enough lenders out there.
Okay. Well, I'm going to continue on.
Okay.
To let everybody know, I'm hoping that this presentation gives you a good basis for the 203K program, and then everyone will be able to take away some information from this. But one of the reasons why you should be originating the 203K is I got this off of the National Realtor Association website. In October of this year, 28% of all purchases were from distressed homes. And currently on the market, 35% of the properties listed are also considered distressed. If we're talking a third of our marketplace today is with properties that can utilize this program, and that's just with distressed properties. It's not even just talking about the properties that are out there that could use a makeover. You're limiting yourself to eliminating a third of the business that you can get out there. By learning this product and working with a lender that has good experience with this, you can certainly do more business. These FHA loans make home ownership more affordable and attractive in the marketplace. Like I said, regarding credit, you don't have to learn anything more regarding the credit. The credit package is going to be exactly the same. You just need to learn a little bit more regarding documentation, max loan amounts, property eligibility, and so forth, the things that we're going to discuss today. Here's some benefits for doing the 203K product for your borrowers. One single FHA government-insured loan. You're not dealing with any kind of additional bank approvals or construction perm loans or anything like that. Remember, at the end of the day, it's one loan. We're funding the repairs after they close. You have your standard FHA down payment. So when we talk about LTVs on purchases, we're talking still 96.5%, and our refinances 97.5%. There's no extra LTVs. Your borrowers are going to be able to walk into a home and be able to customize what they like in that home. So if they walk into a property that needs an updated kitchen, they could then work with contractors, work with a HUD consultant to get the kitchen of their dreams. They're building equity and wealth for the future while adding enjoyment into their home that they're purchasing. Everyone will be able to help vision the home that they always believe. Also in the marketplace, as you know, there's a lot of homes out there that could just use a makeover, that could use some repairs. This is a perfect product for that. Your sellers is going to invite more potential buyers into their homes to sell. I have seen where HUD consultants work with realtors, work with loan officers, and go into a home for an open house and do the open house as a 203K. So borrowers walking into that home can visualize the home that could be. It also makes a faster sale of a home. Homes that are sitting on the marketplace because no one wants to take on the responsibility of coming up with money after closing for additional repairs no longer have to worry about that because we're financing the repair amount right into one single loan. Your realtors. Everyone on this call has to do, working with realtors on purchases. You're now able to walk into your realtor's office and offer the 203K home and be one of their preferred loan officers. It's more of value to them. They're going to be able to sell more listings, satisfy more buyers, and get also rewarded with more referrals for a smooth process. And you as a loan officer, you're going to be able to add more value, like I said, to your current referral partners, working with the realtors, working with the borrowers, develop new referrals. Trust me, you walk into a realtor's office and you do a good job at selling a 203K program with a smooth process, you'll be able to sell more in that realtor's office. And it's also a great tool for past customers. Remember, you can go into your database, and if you worked with people in the past that may need to do some repairs, remember, you could do a rate and term refinance for them, also including the repairs into the loan. So we're going to talk a little bit more about your Streamline versus Standard and what the differences are. The basic difference is that the Streamline is intended for uncomplicated improvements or repairs. You're not going to be tearing down any homes with the Streamline product. And we're going to go through a list of eligible repairs and also eligible repairs for that Streamline. And like I said before, remember, the Streamline has to do with the process. It doesn't have to do with documentation. The Streamline, like I said, uncomplicated repairs, uncomplicated process. Your 203K standards, that's for more of the complicated repairs that require detailed plans, permits, inspections. You're going to be working with a HUD consultant. It's also going to be those tear downs, room additions, much, much more major repairs. One thing you have to be careful when you are talking with your borrowers is that you cannot include any luxury items with either of these products. So you're not going to be able to add the swimming pools, hot tubs, tennis courts, any of those kind of luxury items, you're not going to be able to add on to the property. So let's talk a little bit more about your Streamline. You have up to $35,000 in total rehab costs, and this is important to pay attention to here. $35,000 in total rehab costs. That's not the repair cost. The total rehab cost has additional costs associated with it that we're going to break down in a moment. Once you hit somewhere between $28,000 and $31,000, that's pretty much your limit for your repair costs, because you are going to have to add in contingencies, supplemental origination fees, title updates, and so forth. The Streamline 203K, though, does not have any minimum. So you can have as low as, $100 all the way up to $35,000 in total rehab costs. There is no minimum. The HUD consultant is not required, so your borrowers are going to work directly with their contractors. They're going to receive bids for the required work, and you do not need to have any type of HUD consultant to manage the product. Remembering about contractors, HUD doesn't approve the contractors. There's no website that you can go to with an approved contractor list. The lenders, though, in the mortgagee letters, basically there are detailed instructions on what the lenders can accept for the contractors. So when you are working with your Streamline product and you're working with your lenders, make sure that's one of the things that you want to talk about with your lender, what's acceptable and what's required information from the contractors to make it acceptable. The bids, when you receive them from the contractor and your borrower, they have to break out the cost of the material and labor. They can't just be a blanket statement. They have to be detailed, and they must say what is the cost of the materials and what's the cost of the labor. Self-help is discouraged, and I'm going to take a moment right now and talk to you a little about self-help. Lenders don't like self-help, and HUD actually discourages it. So if all possible, self-help you want to try to avoid, and that's your borrowers doing their own repairs. If you are going to go that route, however, they have to be basically a master at whatever they do. So if there's plumbing work that's going to be required, you want to make sure that they're a master plumber at that job. But they then can't go fix the roof as well. They have to do the job exactly what they are experts at. If you also are going to allow self-help, you are going to have a self-help agreement, and that's just the borrower signing exactly what they plan on fixing themselves. And to let you also know that they're going to be paid only for their repairs only, not for any labor. So no sweat equity is allowed. And also, if there's anybody from the state of Texas, this falls under the cash out refinance laws, the 50A6, where the lender cannot even pay the borrower for the materials. They have to have an invoice from the supplier, and they're going to pay the supplier directly. All work has to start within 30 days of closing, and all has to be completed within 6 months. For Streamline products, you're able to have 2 draws for the contractors. And the bullet underneath has that lenders may choose to release 50% of the repairs at closing. And let me just explain a couple things about this. Your Streamline process means is that your borrower is going to work with contractors directly. After the loan closes, they are able, some lenders choose to release 50% of the repair costs at closing, and that's like something that Real Estate Mortgage Network allows to do. So at closing, your contractors are going to receive 50% of the repair costs, and then once they're completed with the work, your inspections are going to be completed, and then the funds are going to be released after a title update is done, showing that there are no additional liens on the property. So really, it's just a one-time draw after the loan has all the inspections and repairs and title update is completed. Some lenders choose to do it another way, where they have up to 2 draws, where at closing the contractors do not receive any money. They do 50% of the work. They get paid 50% of the work when that's done, and then the remainder afterwards, after all the work is complete. FHA does not require any specific inspections for repairs under $15,000, but that's one of the things that you want to check with your lender as well. Some lenders do require inspections after for release of any funds. Here's a list of your eligible repairs, and you'll notice the first 4 bullets are going to say repair and replace and even upgrade. That's because, remember, your Streamline process, it's going to be for minor repairs. So we're talking replacing your roofs, gutters, door spouts, upgrading heating and cooling systems, repair and replacing carpets and flooring, painting, window, door replacements, and so forth. There is a complete list of what is eligible for your Streamlines, for your minor repairs in mortgagee letters. Their 0519 and 0550 actually expands that list. So I would suggest that all of you on the call go to those mortgagee letters, take a look at them, and they have the entire list on there. I will show you some of the ineligible repairs for the Streamline product, and that includes any major rehabilitation. So you are not able to relocate load-bearing walls, room additions, and like I said before, no new construction. Any repair that requires drawings or bringing in an architect for exhibits and so forth, we're not going to allow that as well on the Streamline product. We can't repair any structural damages. This is really, like we said before, the Streamline product is for minor repairs. No major repairs are allowed on that type of product. So let's jump over to our standard 203K product, and that is for the more complicated projects. And you can actually add a room on, you can move load-bearing walls, you can remodel an entire kitchen and bathroom. And as you may be aware of the kitchen and bathroom, that's really what sells homes. That puts a lot of value into the home. As we said on the slide previously, any property that requires an architect or an engineer, you're going to have to switch that over to a standard 203K. You can include in your standard loans anything that's in addition to this 203K eligible list. So if you have painting of a room, for example, you could put that onto a standard 203K. It's not just for the major repairs. You can also put the minor repairs in as well. And then any projects requiring more than 2 draws, that's also going to be your 203K standard product requirement. We do have a minimum cost of repairs, which is $5,000, and there is no maximum amount. So I've seen properties that are being bought for, let's say, $140,000. I've seen $200,000 worth of repairs put on that property. So there's no maximum, but there is a minimum. So with your Streamlines, going back to Streamlines, you don't have a minimum there, but you do have to review the type of repairs that there are going to be for Streamlines. For standard, you could basically do anything for a home that's existing for 1 year, but you have the minimum of $5,000. You can also finance, the borrowers can finance up to 6 months of PITI if the home is uninhabitable. So that's also for the standard product, which is also a great feature of the 203K. So if you have a borrower that can't actually live in the home because of all the repairs that are being done, we could take up to 6 months of their home payments for the proposed home for the subject property and pay that out at closing, so your borrowers do not have to worry about their first 6 months payments because they're not able to live in the home. That's up to 6 months. 6 months is not required. It could be up to. You're going to, just like the Streamlines, they're going to start the work within 30 days of closing and be completed within 6 months. Inspections are required no matter how small the repair. So before any funds could be released at closing, you do need to have a final inspection completed. You're up to have, you're able up to have 5 drawers. And then once again, self-help is discouraged on standard, just like the Streamlines. For your standard 203Ks, your HUD consultants are required. Now that there is a list from HUD that are approved by HUD, and your consultants have to meet certain requirements. They're going to manage the entire project. They're going to work directly with your borrowers and your contractors, making sure, following through, making sure that all the repairs are done. They're going to inspect the property for a health and safety issue and provide a workup that includes to make sure that the structural, heating, plumbing, electrical, roofing systems, they're going to review everything. Your HUD consultant can also perform your final inspections, which is also great because you're able to have that consultant involved from the start all the way to the finish. So let's talk a little bit about step-by-step guidelines. Your borrowers are going to find a home or they're going to decide to refinance, and on purchase loans, your borrower and seller are going to sign a regular standard contract for your state, but there has to be some type of addendum identifying that it is a 203K loan, and your sales price is going to be the sales price. You're not going to put any repairs on the sales price. Your borrowers are going to work with your contractors on the Streamline loans, and if they are going the route of standard 203K, they're going to work with a HUD consultant who's going to provide your work write-up called the Specification of Repairs Report. That's going to list all of the repairs that are going to be required. The borrowers are going to work with the loan officers, sign all your regular loan application package disclosures, and they're going to include the 203K required disclosures. HUD requires certain disclosures, and then lenders also require certain disclosures. So this is another point where I want to make sure that everyone realizes, go talk to your lenders, chat with your account executives, see what lender they work with requires which disclosures. The appraisers are going to be ordered, and the appraiser has to have all of the contractor's bids, and also if as purchased, they're going to need to have the sales contract. They're going to give an as-is value and an after-improved value. Now, some lenders will take the as-is value as the purchase price, but you do need an after-improved value. And when we go through the max loan amount, you'll be able to see why. One of the calculations requires what is the after-improved value. The appraiser needs to see the bids and the HUD consultant report to know what the property is going to look like and what the repairs are going to be done prior to, after closing. You're going to submit that loan to your lender. Your underwriter is going to determine the acceptable repairs and the maximum loan amount. They're going to issue the conditional commitment based on the appraisal that is completed by the appraiser with all the applicable 203K information. Your loan is going to close. The work has to begin within 30 days and be completed within 6 months. And then after the work is done, the post-closing life begins on the loan. Every time repairs are completed and a draw is requested, the title has to be updated to ensure there's no additional mechanical liens on the property, and then if the lender requires on the Streamline, a final inspection is completed. And on standards, you know that a final inspection is going to be needed before you could release any of the draw funds. The borrowers have to sign a letter of completion, just stating that the repairs were completed, and then the funds are going to be released to the borrower and the contractor. Every time that you do have a draw, though, there will be a 10% holdback just to make sure the final work is done. And then once your last draw, all the funds will be released to the borrower and the contractor. Important to note, any unused funds must be used to pay down the original principal balance because, like I said, I think in slide 1, no cash back to the borrower is allowed. So anything that is not used, any of those funds, cannot be given back to the borrower. So it's important that your borrower understands that. And also, there's not going to be any automatic change in terms once the final draw is released. Determining the max loan amount. Now, a lot of people have questions regarding max loan amounts. One thing, though, is important to remember that you're always going to be subject to HUD's county limits. So make sure that you know in your area what the HUD county limits are for the subject property, where the subject property is located. As I stated before, purchase loans, you're still working with an LTV of 96.5, refinances 97.5. And you may have heard the max mortgage worksheet, that name of that form. Really what that is just detailed instructions on how to determine the max loan amount. And if you really took a look at this form and read through what each of the boxes are, it's just basic addition to make sure that we're calculating the max loan amount and giving the borrowers the max that they are allowed to have. On your purchase loans, your borrowers have to meet FHA's minimum cash investment, so you're still going to be required to have 3.5%. And it's going to be whichever is less. You're going to take either the purchase price or the as-is appraised value plus the total rehab costs. And in the next slides, we're going to talk about what those total rehab costs are. Or you're going to take 110% of the after improved value that's on the appraisal. That's why it's so important to get those the HUD consultant work write-up or your contractor's bids to the appraiser, because they need to know what that after improved value is. Whichever is lesser of those two values, you're going to times that by 96.5%, and you're going to come up with your total base loan amount. Remember, that's your base loan amount. You're going to add the upfront mortgage insurance premium onto the base loan amount. Here's an example. In my example here, I have a sales price of $200,000. My total rehab costs, not just the repair costs, my total rehab costs are $15,000. So I'm adding those both together to come up with $215,000. My after improved value that I've received from my appraiser is $220,000. I'm going to take 110% of that, and my after improved value is now going to be $242,000. Because $215,000 is less than the after improved value, we're going to times that by 96.5%, and now we have a base loan amount of $207,475. I can add my upfront mortgage insurance premium on top of that, and now we have a total loan amount. Our rehab costs, and this is important because this really has to, all of our calculations have to do with our total rehab costs. This is the breakdown of what they are. You have your labor and materials, that is your repair cost, and then we have to have a contingency. The contingency is basically our what-if plan. What if a wall is torn down and we see termites or mold or something? We always have to have a little extra money to make sure that we can cover those unexpected costs. That's going to be 10 to 20% on standard. And on Streamline, this is another place where you want to check with your lenders. Your lenders may or may not require on your Streamline loans. Your inspections and your title update fees are also included in your rehab costs. On your standard loans, those finance mortgage payments, if your borrowers can't live in the home and finance up to 6-month mortgage payments, we're able to put that into the loan amount calculation. Any architectural engineering fees for your standard loans, your consultant fees for your standard loans, your permit fees, if they're applicable for the county and the state, and then a supplemental origination fee. The supplemental origination fee is the fee that it costs lenders, or the charge that lenders have for the post-closing work that's done. And that's going to be 1.5% of all the fees from above from that list, or $350, whichever is greater. So if you do have a supplemental origination fee, the minimum it's ever going to be is $350. And then you can also include your discount points on the repair costs and fees as well. All this makes up your total rehab cost. On a refinance, you're going to take the existing debt plus your total rehab costs, what we just went through, plus your closing costs and prepaids. And if the property is owned in less than 1 year, you're going to use the lesser of the existing debt or the sales price. You're going to compare that to the as-is value plus the rehab cost, times that by 97.5%, or 110% of the after improved value, times that by 97.75. Any one of those three calculations, that's going to be your total base loan amount, whichever is the less. And once again, that's your base loan amount. Then you need to add your upfront mortgage insurance premium onto that. HUD REOs. A lot of people have questions. Can you do a 203K with a HUD REO? And yes, you can. If you're familiar with the HUD REO and familiar with that sales contract, it's HUD Form 95-48. It states in item number 4 what type of financing is allowed, whether it is with escrows, whether it's uninsurable, and so forth. If it's uninsurable, then you're able to do a 203K loan with your HUD REO. Your contingency is going to be 15%. Because HUD REOs could have additional damage, typically 15% is what is required as far as the contingency, especially on any property where utilities are not turned on. Your lenders may require a higher contingency on any property, whether or not it's a HUD REO or not, if the utilities are not turned on. Your as-is appraisal, you're not going to need that as long as you have the HUD property appraisal that was done when the home originally went into foreclosure, and many lenders require that as well. Your new appraisal has to be completed though, and once again, just like any other standard or streamlined loan, you're going to have to provide the appraiser all of the 203K information so they can determine what the after improved value is going to be. Here's a slide that has additional information. You can go to www.hud.gov. Search in the right-hand corner for 203K. It provides a lot of good information. We also have a link here to your 203K mortgagee letters, and on the HUD.gov website, it actually breaks down all of your mortgagee letters. You can always email the government at answers@hud.gov. They're supposed to be getting back to everyone between 24 and 48 hours if you do have questions, and that's good for any FHA loans. You can always contact your lender. I work for Real Estate Mortgage Network, and our website is www.remnwholesale.com, and we have a couple email addresses that are set up to help you as well, at helpdesk@remn.com or remntraining@remn.com. I do want to thank you for your time today. We are going to spend some time on questions and answers. And like I said before, if we do not get to your question, we are writing down all of our questions, and they'll be sent out at a later date, all the questions that we did not get to, as well as all the answers, and you will be receiving a copy of this presentation. Christine is going to join me now, and we're going to go through some questions and answers. Is this my list of questions? Mm-hmm. Okay. The first question I have is, on a demolished home, does any part of the foundation need to be present?
Yes, the answer is yes. The guidance that I've been given is that at least the majority of the foundation needs to be in place at the time of the rehab. So I would say 51% of the foundation needs to be in place.
Okay. The next question we have is, are health and safety issues allowed to be included in financing?
Yes, they are. Very simple. They needed to be itemized in the bid. The lender and the DE underwriter need to have an understanding of what they are and what remediation is taking place in order to have them satisfied, and they will need to be one of the inspections that's conducted throughout the rehab process after closing.
Can code violations be included in the repairs?
No. All code violations need to be satisfied prior to or at the time of closing.
And that's important to remember. So when you're working with your realtors and there could be a code violation, be careful of that one. What if the appraisal future value does not cover all the repair costs?
The borrower would either need to come up with the additional funds at the time of closing, or the rehabilitation will need to be, the cost of the rehabilitation will need to be dropped. If there's some cosmetic repairs that the borrower is going to do, they may have to be removed from the repair bid, but we cannot, if the appraised value does not support the repairs, some other options need to take place.
Is the LTV used on a purchase price or the after improvements?
The LTV is based on the purchase price plus the after improvements, as well as the borrower's minimum investment. The 3.5% would be based on the purchase price plus improvements to the property.
Are 203Ks only for owner-occupied loans?
Yes. They are currently not being offered on second homes or investor properties.
And there was some talk in 2011 regarding investment properties and allowing investment properties to be included in the 203K loan, and that was not, it was determined that those are not going to be allowed. So if you have heard any buzz about it, just to let you know that investment properties are not allowed, and it is going to be principal owner-occupied properties only. Which product fits in best for foundation repairs, Streamline or Standard?
The Standard. Any type of repair to the foundation should be used in conjunction with the Standard or Consultant K products.
We had a question about mold. Is the mold...
Is mold remediation allowed?
Oh, is mold remediation allowed?
It is.
In Standard or Streamline?
It is in both conjunction with the Standard and the Streamline products. However, you know, just like with any repairs, you know, if the mold remediation requires the requires the demolition of a load-bearing wall, for example, you would no longer be eligible for the consultant option. You would be, for the Streamline option, you'd be responsible for the consult. You'd have to use the consultant program. You cannot use the Streamline program, but they're allowed in both. Some other questions that came up was what happens if you're short money to pay for the repairs that were made. When the rehabilitation funds are not sufficient, the lender is responsible for the completion of the work. The loan cannot be closed out with HUD until those repairs are completed. The borrower would either have to come up with the funds from their own money, they could refinance into a new rehabilitation loan, or the lender would have to come up with the money to complete the repairs. Can a 203K loan be used to add a detached garage? Yes, however, it would have to be done in conjunction with a standard 203K program, and it would have to be allowed by the city or county or whatever the local zoning requirements are. Would we be able to do a Streamline 203K to finish a basement? Yes, as long as there's no structural work, no room additions, anything that needs excess work requiring structural work would have to be flipped to a consultant product. One of the things that they mentioned, one of our questions has to do with, you mentioned that the total cost of the rehab is over $15,000. A HUD inspector is required to perform the final inspection. Does it mean that no inspections required if the total costs are less than $15,000? All work must be inspected, whether that is done at one time or several times. It'd be the approved direct endorsement underwriter's condition. As long as the total amount of repairs are less than $15,000, FHA does not require any special fee inspections be done.
Okay, we have a question. What defines health and safety issues?
The appraiser could define health and safety issues, so could a home inspector, so could a HUD consultant and the direct endorsement underwriter. It's sort of a loaded question.
Okay, the HUD REO 100%, $100 down payment, is that allowed on the 203K product?
Yes.
Okay. If a borrower provides contingency at closing, can this be given back to them if it's not used?
No, all excess contingency funds are applied toward the borrower's principal balance. They're never given back to the borrower.
A question came in regarding the appraisal. Does the appraiser do two appraisals, an as-is appraisal and another appraisal with the after improved value, or they do it at the same time?
I typically see them at the same time. The appraiser provides a statement within his comments that tells us what the as-is value is. He incorporates a copy of the specification of repairs and the contractor's repair bid into the report, and then does his report with the after improved value, which is what the underwriter prepares the conditional commitment on.
Can the borrower use any part of the contingency funds, I'm assuming that's left over, for last-minute upgrades like granite countertops?
They would have to complete a change order with their contractor and see if those were approved through the lender.
What happens to the rest of the money from the contingency or any remaining funds?
All gets applied to a principal.
Okay, I'm going to make sure everyone heard that no funds are being released back to the borrower. No funds are being released back to the borrower, and it has to go to the principal funds. Let's see. Will there ever be a time when the 110% of the after improved value is the lesser?
Yes.
Yes, we've actually seen that, so that's for sure. So it is important when you are determining the max loan amount to have that after improved value. Now, if you're disclosing to the borrower and you're using the as-is value or the sales price, and then the appraisal comes in and your loan amount is now less or different than what you were originally disclosed due to the max loan amount determination, the calculation, then that's a change of circumstance, and you're able to redisclose the GSA. Let's see, I'm trying to get through all of the different questions. Let me see. Can a borrower buy a single family with 203K that they're going to move out of a two-family that has an FHA mortgage on it now? Only if it's you have to meet the FHA criteria. Remember the credit guidelines with leaving a two-family home that has FHA mortgage. Remember, you are not able to have two FHA mortgages on at the same time. However, the 4155 does explain there are certain exceptions. So you need to, number one, check with your lender to see if there's any credit overlays, and then make sure you're checking the 4155 to see whether or not it meets those HUD required exceptions. Okay.
Can you use this loan on a home that was built in 1934 and needs major upgrades? Yes, you can. You know, depending on the type of upgrades and work that's being done to the property will depend on whether you can use Streamline or a standard product. Can a 203K loan be used on a condo? Yes, it can, but discuss with your lender for details. Condos come with very specific criteria that need to be met in addition to just being on the FHA approved list.
Yeah, on that HUD.gov website, if you do look up the 203K and want to check out the condo guidelines, like Chrissy just said, there's a laundry list of additional items that are required. So please, before you originate a condo 203K, please make sure that you look at those guidelines and make sure that everything has been met.
Who chooses the HUD consultant, lender, borrower, or loan officer? You know, really any one of those people can choose the HUD consultants. All HUD consultants approved by HUD can be found on the 203K, on the FHA connection under 203K consultants. You can put in the zip code, you can put in the state, they're fairly easy to find. All their contact information is in there.
We had another question come in regarding the county code violations, asking to confirm that they cannot be included in the repairs, and that's a true statement. County code violations cannot be included in any type of repairs. Another question is, can an EEM, which is an energy efficient mortgage, be used along with the 203K product? And the answer is yes. Different lenders offer different products, but there are lenders that do offer the energy efficient mortgage along with the 203K. I believe that REMN Wholesale will be offering it shortly. Someone asked a specific question regarding real estate mortgage network post-closing, whether or not we have a draw department, and the answer is yes. We do everything post-closing ourselves, that we have our own department that speaks with the borrower. We have a 203K specialist, as well as a draw specialist, and they all work together talking to your borrowers, consultants, contractors before the loan closes, so everybody understands completely the process. All your T's are crossed and your I's are dotted. We're going through the questions now. Another question came in regarding obtaining the MIC after 100% completion of repairs, or if you can receive the MIC prior to, even if there's health and safety issues. And that's a question we're going to actually get back to everybody on. There are a few questions here that are quite lengthy that we're not going to be able to get to, but like I said, when we provide a copy of this presentation, we will also give a copy of all the questions and answers, and even the questions that we have not been able to get to.
Can a home be torn down to the foundation and redone completely, and how would that work? Yes, it can. The majority of the foundation must remain in place, and you would obviously need to use the standard products. Could not be done using a Streamline. And I'm not really sure how much more specific we can get on that.
Right. And like I said before, if you've ever driven around neighborhoods where you've seen homes being completely torn down and what's left is the foundation, and then they build a new home around that, well, that's okay. That's all right on standards, but it's not okay for streamlines. Remember, streamlines are for your uncomplicated repairs. A question came in, must you have a permit prior to closing for a purchase? Well, that really just depends on your county. Your counties are going to require the permits, not HUD, not your lenders. However, if a permit is required, you can include that in your calculation for your max loan amount. Okay, let me see if we have any more.
And just so you guys know, I mean, we still have a ton of questions just coming in. We're gonna conclude this in just a few minutes. So let's try to do maybe 2 or 3 more questions. I always try to end this exactly at 1 hour, but this is just there's a lot of information that's being shared here. I think it's going to be very helpful when you guys are going to be sharing the presentations and the answers to all the questions. So. You can continue on with the questions, and I'll cut in a couple of minutes.
Okay. One of the questions is, can you convert a single family into a multi? And that is true, you can. And then, Chrissy, do you have another question?
We've had a couple of questions on the contingency reserve. A contingency reserve is just a fund that's set aside for any unknown expenses that might come up during the rehabilitation process. You know, an example might be plumbing work that's getting done and an additional, you know, pipe gets broken, or, you know, a contractor is on call to install some electrical outlets, and, you know, maybe he's supposed to do 8 or 9, and instead he ends up doing 11 or 13, and additional funds are needed. That's what that fund is used for. It's really used just to cover unknown problems that were not part of the original estimate provided. And again, those funds do not go back to the borrower. They're applied toward principal if there's any remaining.
Okay. We do have one clarification that I want to make sure that we make. Inspections are going to be required for any repair when the total amount financed of the repairs is greater than $15,000, regardless of the individual repair amount. So I want to make sure that everybody understands that, and that actually came from Nancy West from the HUD HOC in Southern California. So I want to make sure everybody is clear on that. I apologize if it was not clear. I also want to add on here as well, do check with your lenders regarding if repairs are going to be required regardless of the amount. There are certain lenders that do require repair inspections regardless of the amount of repairs. Okay, I think we're looking for one more question and one more clarification. No, actually, we're going to put that in the email. So, Andrew, I'm going to turn this back over to you now.
Wonderful. Thank you so much. I really appreciate this. This has just been this has been a wealth of information. I really am. I thank you guys so much for putting the time together to put this presentation on. You know, answering these questions. Just so you know, we probably got through about half of the questions. I mean, and I mean, I'm looking at it right now. My screen is blowing up. We're just getting a lot more. There are a lot of REMN specific product questions. A lot of people are looking to learn more about working with REMN. And as everyone can see, there's these social networking bookmarks that you can write down on the screen, and we'll send a follow-up email that will come with the presentation. You'll have the answers to the questions and also contact details for REMN if you do want to you know, just ask them any questions directly. So thank you guys so much. We really appreciate this. And that concludes the webinar for today. I'm going to shut this off right now. Thank you, everyone. And that's about it. Pam, you guys want to say a goodbye to the audience?